I think we're going to see gold and silver move a lot higher, actually, still. I think as soon as the stock market, this little wave of the all-time highs causing people to cover their shorts and FOMO, people who missed the whole rally saying, I got to get in now, it's like they're chasing pricing higher. Once that wave fizzles out, potentially over the next week or so, I think that's when gold and silver will actually start another leg higher. I think silver could go to about $40, $40.80. I think gold could rally to about $4,090 an ounce. So I think we're getting close to a nice move in gold, but right now it's just taking a breather. Both metals are just chopping sideways as money rotates into more exciting stuff.
Chris Vermeulen believes that gold and silver will move significantly higher. Currently, the stock market is experiencing a small wave of all-time highs, prompting short sellers to cover their positions and triggering FOMO among investors who missed the earlier rally. He suggests that once this wave fades, gold and silver will begin another leg up. Vermeulen predicts that silver could reach around $40.80, and gold could rally to about $4,090 an ounce. In his view, we are approaching a significant move in gold. Earlier this year, JP Morgan reported that we examined the structural shift in gold's demand. We have geopolitically influenced pricing drivers that are fueling its rebasing higher, ultimately posing the question of whether $4,000 per oz is in the cards. By applying Fibonacci extensions to gold's recent rally and pullback, Chris Vermeulen projects that the next major move could push gold to around $3,700. He explains that this target aligns with the 0.618 Fibonacci extension, also known as the golden ratio. According to Blockbeats, Goldman Sachs has reiterated its forecast that robust structural gold purchases by central banks worldwide will drive gold prices to $3,700 per ounce by the end of 2025. The investment bank also anticipates that prices will further rise to $4,000 per ounce by mid-2026. Gold prices will benefit from soaring U.S. deficits and mounting fiscal instability, even if no near-term crisis occurs, according to analysts at the World Gold Council. Before we dive into this video, please like and share it, and don't forget to subscribe to our channel and hit the bell icon so you never miss any of our updates.
Sure, yeah. We'll take a look at the chart of gold here real quick first. If we take a look at the chart of gold, and if we just zoom back a couple of years here, more or less we've seen gold have a series of, it has a rally, and then we tend to see it consolidate sideways for a while. These are very bullish types of price patterns. A lot of people get nervous that they become bearish on things, but what happens is, gold has a series of rally, pause, rally, pause. These pauses, these rallies and pauses are called bull flags. If the price goes up, it creates the flagpole, and then price flags sideways, and it creates just a pause. The market's recalibrating, rebuilding energy before it starts that next move. And that's where we've been really for the last several months for gold. It has this big move. And as you know, Elijah, one of my favorite tools is Fibonacci extensions, which Fibonacci theory, if you look up the number sequence, it's in everything in the universe. It is super powerful. And there's a golden sequence that I like to follow, which it's also called the golden ratio. If we just look at this last rally up to the high that we saw several months ago, and the strength of the pullback, and we kind of carry that forward, we can get an idea where gold should rally to next. And it is showing about 3,700 is the next upside kind of surge for gold. And then they'll probably pause around there. The 618 extension is called the golden ratio. Just like we are right now, gold started to come to life, and gold had one more big push higher. And so there's a very interesting, chart setup, very similar to that time window. And we could see gold and silver have this big push to the upside over the next 2 or 3 months. Could be pretty explosive. And that would probably also mean the stock market is stalling out and going sideways or pulling back. I think we're going to see gold and silver move a lot higher, actually, still. I think as soon as the stock market, this little wave of the all-time highs causing people to cover their shorts and FOMO, people who missed the whole rally saying, I got to get in now, it's like they're chasing pricing higher. Once that wave fizzles out, potentially over the next week or so, I think that's when gold and silver will actually start another leg higher. I think silver could go to about $40, $40.80. I think gold could rally to about $4,090 an ounce. So I think we're getting close to a nice move in gold, but right now it's just taking a breather. Both metals are just chopping sideways as money rotates into more exciting stuff. People love to chase stocks, so.
Chris Vermeulen noted that silver is down approximately 1% today, similar to gold, which is also down around 1%. He explained that silver's price action mirrors gold's but tends to be more volatile and explosive. Like gold, silver has experienced rallies followed by sideways consolidations, classic bull flag patterns. Silver prices fell on Wednesday, according to FX Street data. Silver trades at $36.56 per troy ounce, down 0.55% from the $36.76 it cost on Tuesday. Silver prices have increased by 26.52% since the beginning of the year. The gold-to-silver ratio, which indicates the number of ounces of silver required to equal the value of 1 ounce of gold, stood at 89.97 on Wednesday, up from 89.82 on Tuesday. Silver is consolidating just above $36.70 after bouncing off trendline support near $36.48. The price remains caught between the 50 EMA, $36.63, and the upper resistance at $36.87, while the 200 EMA, $36.27, continues to slope upward, indicating a supportive bias. Chris Vermeulen has spotted some intriguing similarities between today's market landscape and pivotal moments in financial history. It's exciting to see a familiar pattern taking shape. We're witnessing an overvalued stock market nearing a potential peak, gold making impressive strides to new heights, and a weaker US dollar that many global investors are shying away from. Did you know that the US dollar just experienced its toughest start to the year since 1973? President Trump's economic policies have led to some shifts in investor sentiment, impacting the dollar's reputation as a safe haven. On a brighter note, gold continues to shine this year, with central banks actively purchasing it to safeguard against the declining value of dollar assets. Let's stay optimistic about the evolving landscape. Let's get back to the interview.
Silver's down about 1% today. Gold's down about 1% as well. Silver has a very similar type of price action. It's more volatile. It's usually kind of more explosive. We have a rally up and then it's flagged sideways. We've had a rally up, it's flagging sideways. And with the same type of analysis, we can take the lows up to the high and we can come back down to this recent low. And it gives us these levels to draw for silver, which is about $40.60 somewhere in there. So I would expect silver over the next, now this is the daily chart, so over the next month, over the next 20 bars, I'm expecting we're going to see silver run up to about 38.50, have some type of little pause or hiccup for a few days, and then probably have some blow-off move for that second half up to about $40.60. And I think gold and silver will do these at the same time. Silver's come to life. It's played catch up with what gold has done, and I think both of them are a good play. I don't know which one is the better play. I think gold is more consistent. You're probably a better possibility of gold hitting those targets than silver is, but silver has got that percentage move. It moves faster. So I like both of these because they are a metal or they're commodity. They're outside of the stock market. And if the stock market actually gets weak, we should actually see money want to move into physical metals. So, and we're in a unique situation where there's enough uncertainty and stuff going on that gold and silver are going to, I think, want to keep going higher anyway. So I like the precious metals space here. I thought the metals were going to top out several months ago, but instead they've formed this beautiful this bull flag pattern, and it's actually now pointing to higher pricing. So that's kind of my take on both of those from a technical standpoint. The dollar, I mean, it's one of the most hated assets. It's funny, if you go back to the stock market top in 2007, we actually saw gold was hitting new all-time highs. Everyone loved gold. Is in a strong uptrend, just like it is now. It's undeniably, do not bet against gold. Lots of uncertainty going on. And the dollar had gone straight down. It was crushed. It was so hated. It was one of the most hated assets. You look at what's going on right now, we've got the stock market showing signs that it's overvalued. It feels like it could top significantly at any time. Everybody's moving into gold, or not everybody's moving into gold, but gold is moving higher, hitting all-time highs. And the dollar is in the dumps. It's in a downtrend. Everybody hates it. And, that's usually these are turning points, right? When everybody loves one thing and they hate the other and they're beat up and they're both at extremes, usually there's going to be some reversion to the mean, some type of reversal, whether it's a bounce in the dollar or a big rally. I'm not sure. But if we do go into some economic recession, something big, the dollar will probably come back to life. The US is a powerhouse. There's no doubt about it. And when things get ugly, the dollar tends to do pretty well. You don't want to bet against the US. So That's what I think. I think the dollar is going to have a strong bounce. I think the equities market and gold will eventually put in a top, but you definitely don't want to fight these trends. Wait for these reversals, because when these reversals happen, all these assets will actually be a very good trade. You just need to make sure you trade with the new direction when they happen.
Chris Vermeulen maintains a strong bullish outlook on gold and silver, supported by both technical analysis and broader market dynamics. He points to consistent bullish patterns such as bull flags, Fibonacci extensions, and increasing investor interest, especially as traditional markets show signs of overvaluation and potential weakness. With gold reaching all-time highs and silver showing signs of catching up, Vermeulen expects both metals to benefit from ongoing uncertainty, inflation concerns, and a weakening US dollar. As capital rotates out of equities, he believes gold and silver offer a compelling opportunity. While reversals may occur, the long-term trend remains intact, making the precious metals space, particularly gold and silver, a key area to watch for investors seeking strength outside the stock market. Do you think gold and silver will continue their upward trend, or are we nearing a market reversal? Share your thoughts in the comments below. If you found this video helpful, then share it with your friends and don't forget to like and comment on it. Be a part of our community by subscribing to our channel and hitting the bell icon. Thank you for tuning in.